Welcome back to the Community Corner podcast, where we explore the companies in the S500 through the lens of behavioral finance. I'm Arnav.
And I'm Nikhil. Today, we're focusing on Phillips 66, a diversified energy manufacturing and logistics company. Phillips 66 is involved in refining, marketing, midstream operations, and chemicals, making it a key player in the energy sector. We'll be discussing how behavioral finance impacts their decision-making, diversity and inclusion efforts, adaptation to different markets, and how they compare to other companies in the industry. Let's get started.
Phillips 66 has been a significant force in the energy industry for years. From a behavioral finance perspective, how do biases like the status quo bias and overconfidence influence their decision-making, especially in areas like refining operations and market expansion?
The status quo bias is particularly relevant to Phillips 66's approach, especially in how they manage their refining operations and midstream activities. The status quo bias refers to the preference for maintaining existing conditions rather than making changes. Phillips 66 leverages this bias by focusing on optimizing and maintaining their extensive refining infrastructure and logistics network, which has been the foundation of their business. This approach ensures stability and reliability, which is crucial in an industry where operational disruptions can have significant financial impacts. Overconfidence also plays a significant role, particularly in how Phillips 66 approaches market expansion and investment decisions. Overconfidence refers to the tendency for people to overestimate their abilities or the success of their strategies. Given Phillips 66's long history of successful operations and market presence, the company's leadership might exhibit strong confidence in their ability to continue dominating the refining and logistics sectors while expanding into new markets. This overconfidence can drive Phillips 66 to invest heavily in refining capacity, petrochemical ventures, and midstream assets, with the expectation of significant returns. While this can lead to successful ventures, it also poses risks if Phillips 66 overestimates market demand or underestimates the challenges associated with regulatory changes and environmental concerns.
And this focus on leveraging the status quo bias and overconfidence has helped Phillips 66 maintain its leadership position in the energy industry, appealing to both customers and investors who value stability and growth potential.
Exactly. Phillips 66's strategic use of the status quo bias in maintaining their refining and logistics operations and overconfidence in pursuing market expansion appeals to investors looking for a company that balances operational excellence with growth opportunities. However, this approach also means that Phillips 66 must carefully manage the risks associated with market volatility, regulatory changes, and the growing demand for cleaner energy alternatives, particularly as the energy landscape continues to evolve with new challenges and opportunities.
Let's talk about diversity, equity, and inclusion at Phillips 66. As a major player in the energy industry, DEI is particularly important for Phillips 66. How does this intersect with behavioral finance?
Phillips 66's approach to DEI is crucial, especially as the company operates in a global and highly regulated industry where inclusivity can drive better decision-making, operational efficiency, and innovation. From a behavioral finance perspective, strong DEI initiatives can enhance Phillips 66's ability to innovate and adapt by fostering a culture that values diversity and inclusion. A commitment to DEI allows Phillips 66 to attract and retain top talent from various backgrounds, which is essential for maintaining its competitive edge in the energy industry. For investors, Phillips 66's focus on DEI can signal that the company is socially responsible and aligned with modern societal values, which can enhance its reputation and appeal to ESG-focused investors. Additionally, DEI efforts can help Phillips 66 build stronger relationships with employees, communities, and regulators, reinforcing its brand as one that values inclusivity and ethical leadership.
Investors are increasingly considering DEI when evaluating companies, especially in industries like energy, where the ability to foster inclusivity and operational efficiency is critical to long-term success.
That's right. By embedding DEI into their corporate culture and operational strategies, Phillips 66 not only improves its ability to serve a broad range of stakeholders but also strengthens its market position and attractiveness to socially conscious investors.
Moving on to market adaptation, Phillips 66 operates in a highly competitive and environmentally focused industry. How does the company adapt to changing energy demands and regulatory requirements, and what role does behavioral finance play in this?
Phillips 66's strategy involves continuously adapting its refining operations, midstream activities, and environmental practices to meet the evolving demands of the energy market while maintaining its focus on efficiency and regulatory compliance. From a behavioral finance perspective, this adaptability is crucial for managing the risks associated with market volatility, regulatory changes, and environmental concerns. Phillips 66's ability to understand and respond to new energy trends such as the increasing demand for cleaner fuels, the shift toward renewable energy, and the integration of digital technologies allows it to stay relevant and competitive. By using data analytics, environmental impact assessments, and market research, Phillips 66 can identify emerging opportunities and adjust its strategies accordingly, helping to mitigate risks and capitalize on new opportunities in the energy market.
And this adaptability is essential for Phillips 66, especially as they face competition from other energy companies and the growing demand for more sustainable and environmentally friendly energy solutions. Their ability to maintain their brand's relevance and leadership in a changing industry is key to their continued success.
Exactly. Phillips 66 focus on understanding energy market dynamics and adapting its strategies accordingly allows them to remain a dominant player in the refining and midstream sectors while staying ahead of emerging trends and challenges. However, this also requires them to be proactive in responding to changes in energy policies, technological advancements, and environmental regulations.
Now, let's compare Phillips 66 to other companies in the energy and refining sectors like Marathon Petroleum, ExxonMobil, and Chevron. How do the behavioral finance dynamics differ?
Phillips 66's dynamics are often compared to other energy giants like Marathon Petroleum, ExxonMobil, and Chevron, particularly in their approach to refining, logistics, and competition. Phillips 66's strength lies in its focus on refining and midstream operations, appealing to investors looking for a company that balances operational excellence with market expansion. Marathon Petroleum, with its emphasis on refining and retail operations, appeals to investors interested in a company that prioritizes market dominance in refining and distribution. ExxonMobil, known for its leadership in global energy production and integrated operations, attracts those looking for a company that is driving advancements in energy technology and sustainability. Chevron, with its focus on upstream and downstream operations, appeals to investors interested in companies that integrate energy production with refining and chemicals. Phillips 66's behavioral finance dynamics are shaped by its reputation for efficiency, strong market presence, and adaptability, making it an attractive option for those seeking stability and growth in the energy industry.
And unlike Chevron, which focuses heavily on both upstream and downstream operations, Phillips 66's strength lies in its specialization in refining and midstream activities, appealing to a different type of investor and market.
Absolutely. Each of these companies has its own behavioral finance dynamics that influence how investors perceive their value and potential risks. For Phillips 66, the focus on refining excellence, midstream operations, and environmental adaptability provides a unique value proposition in the energy industry.
To sum up, Phillips 66's approach to business is deeply influenced by behavioral finance principles, whether it's through their refining strategies, adaptation to changing energy demands, or their approach to DEI. But like all companies, they are still subject to the biases and perceptions that can influence investor behavior.
That's right. Understanding these dynamics provides a clearer picture of what drives Phillips 66's stock price and where the potential risks and rewards lie.
Thanks for joining us on this episode of the Community Corner podcast. Until next time, I'm Arnav.
And I'm Nikhil. Stay curious and keep questioning the narratives.